Welcome everybody to our first ever online debate. For those of you who have been to European Microfinance Week, you might know that over the last few years we've been always closing with a debate, and that's been one of our most appreciated sessions, certainly the most fun one. And so we're very lucky today to do the debate once again, now this time virtually. And we're joined by two really the best experts I can think of. We have Maria Teresa Zappia from BlueOrchard, who is a Chief Impact and Blended Finance Officer and also Deputy CEO. So I'm particularly impressed that Maria Teresa, you have the time to take part in the debate on top of all the responsibilities you already have. And we also are joined by Bart van Eyck from Oikocredit. And Bart van Eyck is the Director of Investments at Oikocredit, and he's been there since 2015. So we have a particularly good and strong debaters. And what we're going to be talking about is the role of investors when it comes to deposits. Do investors facilitate and intervene to help deposit collection, or do they actually interfere and hurt deposit collections? And one thing worth emphasizing is, what do we mean by deposits? We're specifically focused on deposits that are aimed at low-income households. So we're not really talking about large deposits to build up lots of finance. We're talking about, is the financial service provider really helping to provide a savings product for their target clients? And so Bart van Eyck will, Maria Teresa will take the positive stance that investors actually can intervene to help institutions collect deposits from the poor. And Bart van Eyck will take the critical stance, which is that investors can actually interfere and prevent institutions from collecting deposits. One crucial disclaimer here: neither Bart nor Maria Teresa are actually representing their views necessarily. This is a debate. It's meant to be fun, and we're doing it in that spirit. So each of them will have 2 minutes as an opening statement. Then we'll go into questions. But let's start with the opening statements. Maria Teresa, you have 3 minutes.
Yes, first of all, I'd like to thank you, Daniel, for hosting me. And I would also love to say thank you for Bart for this very exciting competition. As you know, savings is a very important topic, very close to the heart of impact investors. And if you allow me, I'd like to start with few numbers. I'm taking the numbers from the World Bank, the Global Findex data from 2017, where you can see that there are still 1.7 billion people without an account. I think this is a major statement. And if you take female, adults, that would be almost 1 billion of people out there without an account. Said this, if we take this into the context of probably some of the poorest market like Africa, you'd have the one person in three, one adult in three simply doesn't have, any saving account. So I think these are somehow some ballpark figures just to set the stage. So said this, it's clear that if you are an impact investor and you engage in frontier and emerging markets, you want to be part of the solution. And I'd like to share how we have promoted savings in our work as an impact investor over the past 20 years. So the way we have promoted savings is that in our analysis of the credit rating and financial strength of institutions, we have rated very highly the institutions that have a very large deposit base, and especially a deposit base of micro, small, and medium and size enterprises, so effectively the client on the portfolio side. This has been important in terms of financial strength and credit rating, so really more from a financial perspective, but also we have highly valued this in our selection of financial institutions from an impact perspective. So if an institution provides savings and so replies with saving programs to the needs of the small and medium enterprises, we will absolutely consider this from an impact perspective, an additional add-on when we decide to lend to these institutions. So in short, in the past 20 years, we've always selected financial institutions keeping an eye on their deposit base and really, as much as possible, selecting the ones that have demonstrated to have good traction in terms of their deposit base. We have also ensured that our loans are additional and complementary to the existing deposit base, and this could have been in terms of in particular in terms of duration, when we see that there is high volatility, especially in emerging and frontier markets for a smaller deposit. Thank you.
Thank you, Maria Teresa, and perfect timing. Bart, time to hear your opening statement.
Yes, and Daniel, Maria Teresa, I've been looking forward to this session because this is a very important statement, and I fully agree, as a starting point, I fully agree with the opening statements of Maria Teresa that savings are a crucial part of financial inclusion. And it's too often that financial inclusion is only microcredit, micro-lending, and not being complemented by additional products, such as microinsurances or more topic of today, savings and deposits. Now, where the trick is, I think, is if we talk about encouraging financial institutions to start offering savings and deposits. Are we intervening to support, or are we interfering to hurt? And I actually think that in many cases we are interfering, and actually as investors creating more hurt and damage than actually supporting and driving the agenda of financial inclusion. And I'll tell you why. In many cases, institutions, clearly it requires a lot from an institution to become a deposit-taking, and in many countries, a regulated institution. It requires a lot in terms of capital requirements, regulatory requirements, but not to forget also organizational capacities. Yeah, it's more than just the product design. It really requires organizational focus and investments. And the reality, in my experience, is that many institutions are just not ready for that journey. And so where I really appreciate, and I think it's really important for us as lenders to promote this agenda of financial inclusion by also offering savings. I think we need to be very cautious and really make a good assessment about our clients, whether they're ready to move into that journey of transitioning into becoming a deposit-taking institution, instead of just driving our own agenda without looking at the realities of the market and looking at the realities of the organizations that we work with. So my bottom line, my conclusion, in many cases, we come with good intentions, and instead of intervening to support, we're interfering and hurting.
Well, thank you, Bart. Thank you for Maria Teresa for those wonderful opening statements. Maria Teresa, do you have a response to Bart's opening statement?
Yes, absolutely. First of all, I'd like to say it's a pleasure as well to be in this setup and being able to share these views, which of course might be a bit, conflicting from conflicting perspective. But I still would like to share one part of my experience. I remember being a lender in a very, let's say, early stage frontier market, being a lender to a financial institution, and hearing basically that as a result of our lending, they were able to convince that since, foreign lenders coming from, Germany, Europe, were giving trust to that institution, that would automatically mean that financial institution would be favored in attracting deposits. So I can see that, sometimes we might interfere, and certainly if the institution is not ready, to attract deposit, we shouldn't play the role of their let's say in terms of their business planning. But I still think that we have a very big role in demonstrating, especially to the local small and medium enterprises, that we trust that institution, as unfortunately sometimes as a foreign entity this counts even more than let's say a local lender.
Thank you, Maria Teresa. And Bart, do you have a response to Maria Teresa's opening statement?
Yeah, I think there's a nuance in lending to institutions that are already deposit taking, right? That is sort of like you can select them, of course. You can say, we only work with entities that are deposit taking. But if we really want to be proactive in promoting the agenda of financial inclusion, then of course that will require for us to put this on the agenda also of partners of institutions, financial institutions that are not yet deposit taking. And I think here is like the nuance in the debate where yes, we would like to put it on the agenda. We would like to have that strategic conversation with them. However, it really requires an assessment about whether we want to stimulate them and encourage them to become deposit taking, or whether you say, it's a topic of discussion, but let's also be fair and let's conclude that this specific institution is not ready for it yet, which as an outcome, it could be that you agree on a roadmap of steps to be taken. And Maria Teresa, yes, as international lenders, and BlueOrchard, of course, in the industry is a very large name. Yes, you do give credibility to the organization if you are one of the partners of that institution. But that can also work counterproductive. Lending that credibility by attaching your name to it in itself is not enough.
Thank you, Bart. And this is our first bell. We're doing perfectly on time. Just a reminder to the audience, those who joined late especially, this is a debate. I want you to listen closely to Maria Teresa's and Bart's arguments, and you will have to vote on the winner at the end. But before you do that, I also want you to think of questions and submit those questions in the comments. I will choose one question to ask and pose to Maria Teresa and Bart at the end. But before I do that, let me move to the first question. So let's say you were in talks with a potential investee that began as an MFI about 20 years ago. It is now a fully regulated bank with deposits that make up 60% of its assets. However, upon reviewing its books more closely, you realize that nearly all of those deposits are raised from a small number of very large clients, with very few deposits coming from poor and middle-income clients. So while you do make equity investments, the bank is already well capitalized, and its shareholders are not interested in diluting their equity. So you have to, if you're going to invest, it has to be debt. The question is, can your debt help the bank focus on providing savings to low-income clients, or will it simply help it continue with the status quo? And to start, Bart, your response.
Great, Daniel, thank you. Yes, well, in principle, as a lender and when providing debt, you are only continuing the status quo, right? And even as an equity investor, I would actually say you would continue with the status quo, unless here is where the strategic discussion comes in. Unless you have that discussion with your partner, with your client, and say, so we for us it's important that we drive an agenda of financial inclusion. Right? And as part of our assessment, we noticed that a large part of your deposits are concentrated with a limited number of depositors, and that's very often the case. Let's be honest about it. That's very often the case. So if you want to, it starts with having that discussion. Like, is this intentional? Is there a strategy to promote financial inclusion also through more lower income communities? But again, here comes the organizational readiness in. You can have that discussion, but is an organization ready to really focus on the lower income clients. The savers that can only save maybe $1 a month, it really takes a lot of effort. It's a difficult business case. It's very much a financial inclusion argument, which is very important, but the business case is very challenging. So besides the organizational readiness, the buy-in, the true buy-in of the organization, of the management, of the board, to drive that agenda is crucial. And I really think whether you are a lender, yes, as a shareholder, you can be more closer to the steering wheel. But even as a lender, you can have that strategic discussion, but you need to be very selective, and it's not an easy one.
Thank you, Bart. And Maria Teresa, your 2 minutes for question 1.
Yes, so I actually would like to take, I guess, a different cut at the question. I mean, the question is really, does this happen in the market? Have we seen it before? And I agree with Bart, absolutely. I think in my, unfortunately, 25 years of experience in different financial and emerging markets and looking at financial institutions, very often I've seen that really looking at their deposit base, there is a high concentration in few very opportunistic, large savings and deposits. So I'm not surprised, we have seen this over and over again, the financial institutions, when they start building their deposit base, clearly the low-hanging fruit is to get a few large accounts. So this is something that we've seen, but we also have learned, seeing this happening over and over again, why it happens and how could we support as a lender really the development of the deposit base. We haven't really talked about capacity building, and I'm not sure that Daniel had quite put this on the plate, but I think capacity building is absolutely a role that as impact investors, no matter if we are equity or debt providers, we should play. And we have been very successful in leading training and capacity building, really to make the institutions aware that at the end of the day, they already have a captive client base on their own portfolio side on micro, small, and medium enterprises. Yes, indeed, there are maybe $1 client on one side, but these have an incredible growth potential. And also there are, medium-sized, smaller-sized enterprises. So instead of, giving this business to somebody else, since they already are part of your, credit assessment, why not spending time on developing, savings products for this client base? So I think as a last word, I'd like to say as well that the institutions very often learn that big money and big deposits are fast to come in, but they are even faster in going out. And when they've been through crisis, they will remember that the smaller deposits are actually the ones that stick around.
Right. Thank you, Maria Teresa. And that was our second bell, but bells are here for fun. Bart, do you have a follow-up question to Maria Teresa?
Yeah, I do, and I fully agree with this stickiness. I think that is an important argument beyond the financial inclusion. But I'm interested to hear more from you about how do you encourage an institution to actually invest in making that transition on providing services to these, let's say, $1 a month savers. How do you do that to secure that you're actually successful in achieving that objective?
Mm-hmm. Maria Teresa?
Yeah, so I think first of all that the assumption is that if you don't have, let's say, if you have a micro business, you're not supposed to save, or you have a limited capacity of saving. I think that partly is correct, but at the same time we have seen, micro businesses growing along the value chain, becoming smaller enterprises or traders moving into production. So I think that, the first statement of expecting that this big client base cannot really save is wrong. The second statement is that the financial institutions is already, has them in the portfolio, so doesn't really need to do a lot of additional work in understanding what are the needs of these, of their portfolio companies in terms of savings products. So I don't think it is, when I was talking about capacity building and training, is really trying to make them aware about this potential, but effectively the potential is already part of their business. And I really want to stress again that for me what is also crucial is that otherwise this client will go somewhere else savings. So do you want to have a full picture on your client P&L and, activities, credit lines, leasing, contracts, or you just limit yourself to the credit business? And are you losing the bigger picture there?
Mm-hmm. Thank you, Maria Teresa. That's great answer. Do you have a follow-up question to Bart? It's okay if you don't.
I
if you don't, I have.
You don't have to pose a question to Bart. We can just continue, and we're doing very well.
Hold on, Daniel. I do have a follow-on comment on that point, if I may.
Sure, please, Bart.
Yeah. So, yes, what you say, that makes sense, and it also makes business sense to get a full-in view on all the clients' business and assets. So I think there is a business rationale to be made. I question, however, in the end, that FIs may say yes, yes, I understand, but how many of them will actually also act on it? Will actually also make the investments to develop the right products, to promote them, to educate, because that's really where the investment comes in. The organizational investments, it's all the product design, it's the organizational capacities, the governance, everything that needs to be set up. And in fact, I think that's where most of them, they agree with your statement, but most FIs, they don't act on it. And capacity building can support, and of course capacity building is like an attractive bonus.
Whoops.
Which is did we lose Maria Teresa? No, you're back. Okay.
That was me trying to mute myself and I clicked on the wrong thing. Sorry.
Okay. No, so I think that is attractive. I think actually what you said, otherwise they put their deposit somewhere else. That may actually, in many cases, be a better alternative than the financial institutions themselves moving into offering deposits to lower income clients.
Great. Thank you, Bart. And my apologies for that little technical snafu. Dear audience, I hope you're following this fantastic debate. I certainly am enjoying it. We're going to move to the second question, but in the meantime, I really want you to think of some questions to pose. As I said, I will select one at the very end. And if you don't, that's okay. I have a third to ask. So question 2. You're a debt-only investor specializing in rural and agricultural MFIs. You're thinking of investing in several mid-sized cooperatives. While these cooperatives have member deposits that exceed their loan portfolios, right? So they collect more deposits and loans. They're interested in expanding their lending for drought-resistant crops that they believe will help their members adapt to a changing climate, especially given that your fund partners with a large agri-products company that provides technical assistance services. However, should you be concerned that your funding will still undermine the cooperatives and their current focus on deposits, not undermine the cooperatives themselves, but undermine their deposit taking? And Maria Teresa, I think that's the question on technical assistance that you asked earlier. So please, your response to that question.
Yes, absolutely. So first of all, I'd like to thank you for the question, Daniel, and I'd like to tell the audience that I didn't prompt Daniel specifically to this question, but as some of you know, BlueOrchard is actually one of the few climate adaptation strategies in the industry, and I say strategy for compliance issues. But effectively, we have been spending the past 6 years on really looking into how building resilience of smallholder farmers to climate and weather events. So we've developed quite a lot of knowledge of crop insurance and the importance of crop insurance for smallholder farmers. We have been successful in approaching, financial institutions of different types, including credit cooperatives, in actually developing crop insurance products with them. And why we fundamentally believe that this is not in any manner undermining their deposits or cooperative association base is that effectively through the crop insurance, we can enhance the capacity of saving of the smallholder farmers. So we see this product as absolutely complementary to the, let's say, the essence of the credit cooperatives business.
Great, thank you, Maria Teresa. That's no, I did not make this question specifically for you, but you're right. It aligns very nicely with BlueOrchard and the work you've been doing. So Bart, do you have a response to Maria Teresa?
Yeah, I love this this question, and of course, this is a crucial theme. So climate resilience is becoming more and more important, and that's absolutely something that's that all of us as responsible impact investors is a theme that we should encourage and where possible also support with financing. Why I love this question is I think it's a very important example for the debate that we're having, because cooperatives, many cooperatives, if you talk about organizational readiness, many cooperatives are not ready from an organizational perspective to expand their product offering. Yeah, so here, if you speak about lending to them to support climate resilience, I think that is fantastic. But there is a true danger that indeed will start interfering with their other activities. And well, in this question, it could interfere with their deposit taking. In the case of cooperatives, I think the cooperatives are pretty loyal, have a pretty loyal member base in terms of savings. Yeah, but I think the example is like here we talk about very often less mature and less organizational ready organizations. And by so sometimes we need to say, guys, is this a smart thing to do? Instead of just thinking, it's great, we'll finance it. We really need to look at if the organization can handle this. So in this example, that's why I love it. I really see a danger, and coming back to the key statement of this debate, I really see here a danger where we're not intervening to support, but actually we may up interfering and hurting.
That's always a risk, isn't it? Thank you, Bart. Maria Teresa, do you have a follow-up question you wanted to ask of Bart?
Yes, I like to. I see very much the topic and the reasoning put forward by Bart, and I respect it entirely and professionally. I still wonder. In Europe we have a number of markets where cooperatives have been very, very successful. I'm thinking about Germany. I'm thinking about other markets where the cooperatives have really been, filling the gap of the base of the pyramid equivalent. And so I ask myself, is Bart in any manner asking us to leave, rural and agricultural clients behind? Are we only, again, just concentrating on the top of the pyramid and leaving, potentially smallholder farmers behind in their capacity to develop savings?
Thanks for that question. If that's the impression that I gave, then I'm very happy that you asked that question. To start off with, Oikocredit itself is a cooperative. Yes, you didn't know that. We are a cooperative. And we have a very active member base and a truly impact-driven member base. And we are very active in agricultural financing. And all of us that are active in agricultural financing know how difficult it is. But it's really one of our first, 45 years ago, one of our first loans was actually to an agricultural cooperative. And so that's very much part of what we do, and it remains very much part of what we do. It's one of our core sectors that we're active in. But the caution that I want to give here is that I think there's a lot to be gained with first strengthening the capacities and the governance of cooperatives before we start complicating matters by asking them to start developing all kinds of additional products and all kinds of additional offerings. And that's a risk, because if there's like a TA component, that's the check. And that's what people love. So there's the risk that people want to jump through all kinds of hoops, which is actually not something that they can deliver on, and will actually hurt and damage the offering that they currently have to their members. And so we're very dedicated to it, but my point is we need to be very selective. And yes, sometimes it's necessary to really first build the capabilities before we can start asking all kinds of additional services to be provided by these cooperatives.
And Bart, do you have a follow-up question to Maria Teresa?
No.
No. Okay. Maria Teresa, do you have a response to what Bart was just talking about?
Yeah, I was just wondering, since of course I did, and I do know that Oikocredit is an incredible example of a cooperative. I was wondering, if Oikocredit doesn't find the solution to this problem, who else would?
I
think that merits a response, Bart.
Absolutely, I would be insulted if you don't give me the opportunity to reply to that. And yes, so we do find a solution, but it takes time. Like I said, for us, the solution is it's really the caution. It's really to make sure I've mentioned it before, the organizational readiness. It's really the organizational buy-in. And these are trajectories and these are roadmaps. And I really see the danger if we, coming from a very good intent about financial inclusion, if we push our agendas too much without looking into these realities, that's where we end up creating more hurt than support. So that's the way we deal with it, and I think we're pretty successful with it.
All right. Well, I'm looking. There was just a comment posted. Let's see. So it's not really a. Birgit has an interesting question. I'm not sure if it's a debating question, but it is worth asking. And I'll just put it here so you can you see the question here? So the readiness of MFIs to transform or co-ops to enhance their products also depends on their size. So how small a financial institution is BlueOrchard willing to or capable to invest in? Birgit seems certain that Oikocredit invests in even as small as 50,000 euros, but I'm not sure if that's still true. Any thoughts, Maria Teresa?
Yeah, so I think first of all, thank you to Birgit to raise the issue of size. As we know, this is certainly a big issue, not only in terms of market penetration, sophistication of the investees, depth of the deposit base. I remember in the preparatory call we talked about regulatory environment. We really went through the entire cause and effect of the importance of deposit, but also what are the effectively limitations. So depending, and I think this is not really about BlueOrchard, but depending about the type of investees and the type of mandates and objectives that we have, we can go as low as we want. In particular, for example, for the product that we were referring to before, climate insurance, and smallholder farmers, the captive client base is actually with smaller cooperatives. So we see a lot of potential for those type of financial intermediaries enriching, for example, certainly the rural sector.
And Bart, is Oikocredit still doing €50,000 investments?
It's rare. We can do it, but in many cases our threshold is 500.
Okay.
But there are indeed examples where we do less. But I think it's a good question put forward by Birgit, and yes, sometimes it is relevant, and sometimes size does matter.
Size, yes. When it comes to loans, absolutely. We have time for one more question. Patricia Richter asked the question. Let me put it up here. How are investors measuring success towards encouraging deposits at the level of clients? And I think it really encapsulates what we've been talking about. Bart, how about you take a stab at it first?
Yeah, so when we do a loan or investment, we quantify the impacts, and these are not standardized. So it's really different per loan or investment, where we do our ESG scoring of a partner, and if the ESG scoring identifies a couple of attention areas, then these are the areas that we make our impact objectives specifically for that loan. Right, and then we agree with the partner, like, okay, so these are the things where we want to work on with you, we want to improve, and these are the objectives. And so deposit outreach can be one of them, as part of, if part of the assessment is that we really encourage the partner to do more savings and deposits, or a bigger outreach. Again, with all the requirements that I mentioned before, but once the alignment is there and the agreement is there, then that's one of the impact objectives that we agree on, and we also then ask the partner to report back on that on a quarterly basis. And so that allows us to track, and not just to track and monitor and sit back, but really to also have a continuous conversation with the partner. What are you doing? Is it working? How can we support? We also have a capacity building arm. We've got capacity building funds available to support that, and so that's how we agree and actively monitor and steer.
Thank you, Bart. And sorry, I just wanted to make sure that Maria Teresa also has a chance to respond. So, for looking at BlueOrchard, how do you measure success towards encouraging deposits?
Yeah, I guess the other way I like to reply to Patricia's question is in the context of not how you select a client day one, but more how you look at repeat clients. I think when you look at repeat clients, and when you decide to support an institution in the longer term, let's say 10, 15 years, you really want to see progress on their deposit base. So we very often have really monitor their deposit base, monitor, as we said, the diversification of their deposit products, how the sophistication of these, and how have these really filling gaps in the market. Things that we've also targeted is really look at gender lens, and deposits linked to different genders, minorities. So we've been looking at this. But more than anything, I think that another success, I think, in the impact of deposits, it's really the duration. So having a look when deposits that initially are only rolled over every 3 months are actually start becoming really part of the capital base of the institution, because the clients that they're targeting, they clearly have trust in leaving their money there for longer.
Right, that's a great point. So the stickiness of deposits is key. So I would like to go ahead and we've handled quite a few questions. I want to make sure that you have a chance to make your closing statements. Just a reminder to the audience, we will have a poll at the end of the closing statements. And so do vote for whoever you feel is best argued their point. Maria Teresa, that investors can intervene in order to help MFIs provide savings products to low-income clients, or Bart, that investors really interfere or run the risk of interfering in terms of getting MFIs to raise deposits from their clients. So, frankly, if it were to me, I think they're both have made extremely strong cases. I don't think I would be able to vote, but I look forward to seeing what you all think in the audience. So, closing statements. Bart, how about you go first? Your closing statement, please.
Yeah, so this is a very important topic, and I think it should be, if it's not yet, it should be a very important topic and a very important item on the agenda for all of us as responsible investors. That we go beyond micro lending only and really focus on financial inclusion, and that includes offering deposits and savings. The only word of caution is yes, you have to be selective. And it can be institutions that are already taking deposits, and we encourage them to also reach out to lower income households, or even institutions that are not yet deposit taking, to encourage them to convert into deposit taking, not to underestimate what it requires from an organization. And so I just want to emphasize it again, and that is also what we should focus on as responsible financiers, not just driving our agenda of financial inclusion, but also looking at the readiness. When is the time to start doing it, to support institutions? Because if we don't do that, then the damage that we will create is a lot bigger than actually the benefits, with all the good intentions, with the benefits that we're trying to realize.
Mm-hmm. Thank you, Bart. Maria Teresa, your closing statement.
Yes, so I can only re-emphasize what Bart said in terms of the importance of financial inclusion, including serving the client base with a range of services, which of course means savings products. It's crucial, and it's the mantra of course all impact investment managers. At BlueOrchard, maybe we've done a step farther in putting our skin in the game. We are today offering, in addition to loans to financial institutions, we have been also depositing our funds in the financial institutions themselves. This has been really a way of showing that we believe that creating their deposit base is essential, that we believe that, as a foreign lender, we have a responsibility to catalyze and unlock other depositors in the local market. And this has really been an incredible demonstration effect. We have seen that depositing our funds with local financial institutions has actually triggered, a domino effect in terms of attracting additional deposits. Mm-hmm. And I think we are sure that this is a way to also show that we can be catalytic and reinstate that we are not in any manner reducing deposit, but actually effectively enhancing and attracting additional depositors to join the club.
Well, thank you very much, Maria Teresa. Thank you, Bart. I have to say, this has been as rich a discussion as you can have. It's not just meant to be a debate that's fun, though it is that. It's also an opportunity to really learn. And from the two perspectives, I hope that you in the audience really got some food for thought. So now it's time to vote. Please cast your votes, and while we do, the poll is live, I'm informed. While we do, Bart, Maria Teresa, if you have some thoughts to share for 30 seconds each.
Yeah, I just liked a lot about the skin in the game comment that you made, Maria Teresa. I really compliment you for that, because it's easy to make all kinds of statements as an institution, but really also giving the right example, putting in deposits. yes, it's still institutional funding. It's not lower income funding yet, but I do think that indeed that builds trust also to the depositor base. I like that a lot.
Maria Teresa, any thoughts for Bart?
Yeah, but maybe on my side, I think that, as we said, this is a masterpiece of financial inclusion. I think the savings are absolutely crucial for ensuring, a safety net. I think they've been crucial for us in the OECD economies. In a COVID year, as you know, the deposits have increased immensely. So I love to sit here in 5 years and not say anymore there is only 1 out of 3 adults in Africa that is actually having an opportunity to save, but maybe 2 out of 3. And that would be already a great achievement.
Great. Well, thank you both. I am informed that the poll as of now is 60% Maria Teresa, 40% Bart. But just a moment ago it was 50-50. So I think that pretty much reflects the mood of the audience. Thank you to both of you. And I hope those of you in the audience, while we're not live, we're not meeting in person, so I can't see you. But I hope you have enjoyed it as much as I have. I certainly have. And I hope you have come away having understood that deposits is something that's really important for the clients, and investors really do have a role to play. That role is not obvious. It's a double-edged sword. They can help and they can also get in the way. And it takes a very conscious effort to be aware of which of those two you're really doing. But I think Maria Teresa made a very strong argument that investors can, in fact, have a very important role to play when it comes to encouraging deposits, despite Bart's points that it is difficult to do. So reminder again to all of you that both Maria Teresa and Bart have very kindly and generously agreed to take on these roles, and these may not be ideas that they necessarily themselves hold, though I have a feeling that at least part of it are. But thank you again to both of you, and I hope to see you next year in person.
And Daniel, quick question. Bart is not taking me to court to question the voting system, right? As it is the trend these days, right?
Actually, Ugo is telling me now that it's back to 50-50. So I guess the count is still happening. We'll check a week later and we'll see if the count has changed.
It's been a pleasure.
Likewise, Bart. Thanks a lot, Daniel, for having us.
Right. Thank you to both of you.
Oh.
Bye-bye.